Hello and welcome back. Hope you're good, doing well. Hope that you can and sound is all right on your end. Do you hear me? Just let me know that, guys. Sound is all right. Do you hear me? All right. So thank you very much. Let's move on. Okay, so let's move on for this weekly market outlook. We are having very important week, important month. September is very important month regarding the interest rate hikes. So if anyone wants to join us looking for membership, looking for training, just simply go to wave-trader.com, all right, and check the membership levels there. All right, check the membership levels, and if you are looking for further information, just simply fill that form and send that form to me for further information. So I'll try my best to get back to you as soon as possible. All right, so let's move on. Let's look at the some setups we had previously. Some opportunities. Just look at them, and then we can move on. So we are having read the scene in September. So very important, read the scene for for the market, that the scenes can set up the direction of the market for rest of the 2023. All right, so first of all, Nasdaq 100 index, we were expecting it to drop from that top, this rally which we were having over there from June, that rally to end over there and start falling over there for the next leg lower. So we are already into that leg, right? And yeah, it's just heading lower. So we were expecting it to drop from that previous top. So all corrections were over there were bearish opportunities to sell it all the way back to that previous low. So we are heading towards that previous low. So all these corrections were opportunities to keep falling. So these corrections, so I hope that you guys have seen those charts already. So we were having almost similar wave appearing over there across the equities, all right? So specifically the US indices, all right, and the EU indices as well, all right? So yeah, so just heading back to that previous low. So this is the recent correction which is just breaking out. Okay, we are having another one is just simply appearing over there. So we still got a room over there. Okay, September is our read the scene month. We are having read the scene from ECB, RBA, Bank of Canada, Bank of England, all right, Bank of Japan, all right, and the most important is the Fed, which is going to be the later of this September, right? So the end of the week of September. Okay, so that's going to be the very important read the scene as well. So indices are simply setting up for that move, all right? So indices are dropping because market is expecting that Fed going to raise the interest rate for another 75 basis point at September meeting, and market is just simply pricing in for that move, okay, which highly likely can break the previous bottom, previous low, right? This previous low, which we may see breakout of that previous low before we're gonna have another similar kind of rally, all right? So we're gonna talk about that. So indices are heading lower. Similarly, we are having pressure on cryptos. Crypto already made that move, testing these previous lows. Okay, there is possibility that we may see another leg lower or possible new low. So there's going to be a buy opportunity like that. Okay, so I'm going to talk about that, what kind of opportunity we may see on these coins, all right, for short to medium term buy opportunity and possible longer term reversal. So longer term reversal is not there yet on these coins. Okay, but yes, the opportunity you are looking is very much similar like that. Okay, so we were expecting this coin, even some people think that this project is dead, all right, but it is just simply bouncing off from these previous lows, all right, and the recent move which we were expecting over there has just gone more than 260%, right? So these kind of moves you are looking, okay, these kind of moves, okay, or in the best case scenario, this is the move you are looking on those coins, the coins which I have posted. All right, so if you remember the previous, the old analysis on these coins, we were expecting them to reverse for longer term before 2020. All right, if you remember, so those coins reverse aggressively. So these kind of moves you are looking first on these coins. All right, the coins which I have just posted. So there are going to be many coins I will show today which you can look for short term. All right, these kind of moves. So if you go my YouTube channel and look at the Luna setup, all right, so I was showing a short term buy opportunity, okay, within these areas. Yeah, so breakout of this and test that previous low and short them. So these kind of moves you are looking first, which can give you, 100% or 50% return on your trade, okay? And in best case scenario, all right, guys. So hopefully it's fixed now, so you can hear me and it's working, right? So let's move on. So we're going to talk about the yen pairs as well, guys, with detail. All right, let's just move on. So copper is just simply, dropping and heading for the next wave to the downside. All right, so we were expecting it to continue to keep dropping. So it's just dropping and heading for the next leg lower. All right, and AMD is also heading lower for the next bearish leg, just simply following the tech stock. All right, and heading back to that previous low. All right, there was a similar opportunity on the AMD, and the similar opportunity is just appearing over on Amazon. Amazon is also setting up for the similar leg, the leg which we are having on the Nasdaq 100 index. All right, and Nikkei index is also, breaking out and continue to keep dragging more lower. So same goes with the small caps. Small caps are also dropping, heading lower all the way back to that previous low. Okay, Euro Chief bounced off aggressively from the low, similar way, the way we were expecting it to do. All right, so next week, ECB rate decision going to be very important. So if ECB, is going to raise the interest rate with 75 basis point, okay, we may see, strong aggressive rise for upside. Okay, so there is possibility that the Euro Chief can bounce off really hard and continue to keep rising above the 1. So Australian dollar and CAD dropping but going down very, very slow. Okay, there is a possibility that next week we may see price to break below that after they read the CN on Australian dollar. Okay, if it doesn't, yeah, and price just form that flat formation, breakout and continue to keep dragging lower all the way back to that previous low. Okay, so still opportunities there on the Australian dollar. All right. So these are the opportunities which I posted recently, okay, and the other one is much older. So we're gonna talk about the update now, right? The upcoming opportunities. So these are the coins which are, at top of my list. I'm watching these coins very, very closely, okay? So we may get, short to medium term opportunities on these coins. Every time they come and test the previous low, they can give you short to medium term opportunity, okay, and possible longer term opportunities. All right, so if I'm gonna explain it to you again, okay, the opportunities you are looking are these, okay, these trades you are looking, and in case if they rise very, very aggressively, okay, then reverse for upside, then start rising for upside for longer term. All right, and both are same coins or almost same coins. The Luna C is the older chain and the Luna is the new chain. All right, okay, but the Luna C, which is highly expected that this project is not going to survive anytime soon. I mean, not going to survive. So the project is already dead, because the reason is that the system has created tremendous coins, almost 7 trillion coins. All right, and for this for Luna C to go above 1, yeah, so a lot of money needs to come in, or system has to burn a lot of coins before it goes higher. What it can give you, short to medium term opportunities, as I said. So if I'm gonna look at the previous chart, okay, the opportunity which we were looking last time. So if I'm gonna pull out the before this chain, you know, changed to a new chain. So we were expecting Luna at that time. This is the old chain, okay, with the name of Luna. So they just changed the chain and turn it to Luna C now, Luna Classic. Okay, so we were expecting that trade at that time, this move. So we already got that. So this is the old chart. This is not going to be updated. Okay, so we already got, you know, moves from there, these lows. Price already went above from these levels, okay, and tag that 30. So 30. So there is possibility that this coin even can go above 60 in coming days to weeks, all right? And if I'm gonna, you know, go back and look at the chart as a log scale, right? So we may see another, you know, correction very much similar like these previous corrections, okay? And that correction going to be a sign for another breakout for more upside. So if I'm going to look at this, so we may see another correction. So last correction took a lot of time, okay, to break out for upside. So we were expecting it to hold these areas or give us a, you know, buying opportunities over there for more upside. So it held that triangle and just simply break out last week. Okay, so you are not chasing that the you know, Luna's Classic at the current price. Okay, do not chase. So we may see, you know, similar kind of correction. There is no reason for this to chase for the buy at the current price for more upside. Okay, we can see that the Bitcoin or the whole crypto market is extremely under pressure because, you know, Fed is fighting with inflation. Because of that, you know, all these coins are under pressure and falling and trying to find their base for longer term, you know, for upside. So while you're looking, you know, trade is already done. You're looking pullback. Okay, pullback, very much similar like that slow pullback, all right? Or that was a small correction, okay? Why it was small? Because price was so cheap at that time. People just, you know, went in and it just broke out. So that was a bigger correction. So you're looking similar kind of correction, okay? So bigger correction, either the sharp one, okay? If not the sharp one, the slow one, okay? Go and deeper and then again take off. All right, so aiming to go long again on these areas, all right, for longer term, these areas. So these prices, and if it comes to there, it's going to be a best. All right, so we already got the next leg. So we were aiming this to go higher when price was there. Okay, we were aiming it to rise. So price just gone above from these lows. So log scale looks like that, and the normal scale looks like this. All right, so you're looking it to come down. All right, come down all the way up to that trend. So Luna C and Luna both are very much similar. Okay, so the trade you are aiming, I have already, you know, told you what trade you are aiming. So this to just keep crawling all the way back to that previous low, and that's the trade. And in case if price right, be prepared for the price to break down these lows and form new low. Okay, when you are looking to buy, be prepared that the price can break down. There is no you know, floor or something like that. You can say that the price only gonna hold that, and you're gonna, you know, price only gonna go higher. So be prepared that they can break down, they can form new low. The reason Fed is fighting with the inflation. Okay, as long as Fed is fighting with the inflation, there is no bottom. All right, there is no bottom. Prices can go extremely low before going to rise. So be prepared for that. Fed want prices to come down. So when they want prices to come down, all right, and you are looking prices to go higher, you are trying to go against them. You are fighting with the Fed. All right, so rather than fighting with the Fed, let the prices, let these assets be more cheap. Okay, when they are more cheap, start to build your positions for upside. Okay, so dollar. So dollar is rising from that previous weekly low. All right, so if you remember that we were expecting that wave to happen. Yeah, so no one was expecting dollar to rise from that 90, okay, and go all the way up to that high. What everyone was expecting when Fed was cutting the interest rate, everyone was expecting that we are having a cyclical drop on it, on the dollar. Dollar is going to drop for a cyclical move to the downside, and then we're going to have, you know, when Fed going to start raising the rate, then we're going to have the move. Okay, so people were expecting that kind of a wave, and it makes sense. It makes sense price to you know, dollar to fall cyclical for that move before going to rise. What caused dollar to not go that much far away? Similar kind of inflation we have seen across the world. All right, I mean, the way, you know, people were expecting that dollar gonna get devalue. All right, similar way, you know, we have seen devaluation across the market. We have seen devaluation on the euro, yeah, and on other currencies as well. Yeah, so dollar is on the rise. So what we can expect from the dollar to do? Okay, so there is one thing you need to understand, that why dollar may not fall. Okay, why dollar is not ready to fall. What can cause dollar to fall? All right. So let's just look at the inflation chart. Okay, and I'm gonna put some more chart on it to let you know that where you need to keep eyes. Okay, what you need to keep in your mind before you start looking for dollar to drop. The dollar is simply not ready to drop for longer term. Yes, it can drop for short term, all right, but that short term gonna be a buy opportunity again on the dollar. Okay, dollar only gonna drop once we're gonna have fundamental change. So I'm searching, my inflation chart. So inflation chart is going to be here. There you got. This is the inflation chart, guys. So very important chart. Okay, so if I'm gonna put it line, right? So there is inflation chart. So where is inflation? Inflation is sitting at the 9%. Okay, so if I'm gonna pull up the US 2-year yield, right? So US 2-year yield is sitting at right now at so it shouldn't be percentage. So it should be shouldn't be a percentage. It should be new scale on it. So it's sitting at according to this chart, it is showing 3%. Okay, but it is above 3%. So the data is not updated. So the updated, is the 350. Okay, so it is sitting at the 350. This is very, very important chart. Okay, so very important chart. So you need to understand that what's happening here. So inflation is there, close to 9%. Okay, so US 2-year yield is already pricing in at 350. So if I'm gonna pull out Fed fund rate, Fed funds, Fed fund rate. So Fed, where is the Fed fund? Fed is, having rate is 250. Because the Fed fund rate is sitting at the 250. So you see, there is a huge gap. Okay, there is a huge gap. See, there is a huge gap. Inflation sitting 9%. Yeah, so market is pricing in for a couple of more hikes, sitting at 350. Fed holding it, rate at 250. All right. So we haven't seen in past. Okay, we haven't seen in past that the Fed held interest rates below the inflation to bring down the inflation. All right. So Fed fund rates has to go above the inflation to bring down the inflation. All right. So this is a very important point. So Fed fund rates has to go above the inflation for the Fed to bring down the inflation. All right. So now we have seen, many charts have dropped across the market. All right. Many inflationary assets have dropped, which is a deflationary sign. Okay. It is being expected that inflation gonna drop significantly. All right. And gonna settle somewhere close to 5% or 6%. All right. And the window which we are having, the huge window which we are having over there, that gonna get smaller. Means that Fed has to raise interest rate less as market is expecting right now. Market is expecting Fed fund rates to go above 5%, 6%. All right, and inflation to fall 5% to 6%, and it's gonna make Fed job easier to bring down the inflation. So hopefully you understand my point. All right, as long as inflation gonna stay close to 9%, there's gonna be pressure on the Fed. Okay, Fed gonna be more hawkish, right? And as long as Fed gonna stay more hawkish, dollar is not going to drop. Okay, so as long as this gap is there, you are not expecting dollar to drop. Okay, so what should happen over there? Inflation to fall very, very aggressively. Okay, and Fed fund rates to go above the inflation. And then, inflation gonna be under control, and Fed gonna, have, credibility. right? They're facing credibility issue because of this, huge gap. Hopefully you understand that. So what we may expect on the next meeting, we may expect another 75 basis point hike, okay, which can bring up the Fed fund rate at 350, okay, 350. So that's why 2-year yield is sitting up at 350. All right. So what I'm expecting inflation gonna fall very, very aggressively. Okay, inflation not gonna stick at that area. Inflation gonna fall very, very aggressively. And the assets which are not feeling the effect of deflationary move yet, they're gonna fall. Right? And yen is one of them. Right? Yen is one of them. So we have seen already drop on oil, on other commodities like corn, okay, wheat, and lumber, all those commodities which are inflationary, they have dropped, right? Copper, one of them. Copper's dropped, right? So hopefully you understand that this is very important, point you should need to keep in your mind, guys, when you are looking to trade on the dollar, right? So dollar is simply not ready to drop until this gap is closed. Once this gap gonna close, market gonna start preparing for the rate cut. Okay, rate cut is going to come. That's for sure. Fed is going to cut rate. They're gonna cut rate. Okay, when they're gonna cut the rate, when that gap gonna get closer, and market is already telling us that Fed is going to cut the rate. Okay, if we're gonna look at this yield curve, okay, this yield curve is telling us that Fed is going to cut the rate. Okay, there is no way to get out from this inversion without cutting interest rate. So Fed only gonna get out from this inversion by cutting the interest rate on short end. Right now they are raising the interest rate. Longer term yield is not rising, but short term yield is rising, which is causing that inversion, right? So they're going to cut the interest rate. Once they're going to start cutting the interest rate, that's going to be the timing to sell the dollar. Okay, so we are far, far away from that point. Now, maybe 8 months, all right, 8 months or another year for that move to happen. Hopefully that makes sense, all right? Now, let's move back to the dollar now. So what you are expecting, okay, you are simply staying bullish on the dollar, but getting ready for a pullback. And those pullbacks going to give you buy opportunities. All right, so we may see next week during the ECB rate decision one more leg lower. Okay, so we may see one more leg lower. So once that sharp sell-off comes over there during the ECB rate decision, you are looking it to drop. Okay, and once price drop, you are looking again it to continue to keep pushing more higher. So, okay, so this triangle. In case if price break down and push more lower, then again you are sticking to the short to medium term buy opportunity. Okay, that's not gonna change. Hopefully you understand that the analysis which I have made over there, why you are not looking dollar. Dollar is right now extremely strong, all right, and broken these previous lows. All right, but as long as those fundamentals are not going to change, which I have just shown you, inflation, Fed fund rates, and yields. Okay, so dollar gonna stay strong, and you're looking these charts to just keep falling. Okay, so similar, we may see breakout for another leg lower. Okay, but you shouldn't chase that trade. Okay, you shouldn't chase that trade. You're looking for this to pull back, go back all the way. This might be a short-term buy opportunity again. Okay, and again you can look for this to continue to keep dragging more lower for short term. Okay, so next week during the ECB rate decision, you are looking it to bounce off and go back up. And once ECB rate decision gonna be over, okay, market gonna start preparing for the Fed rate decision, all right? And you are looking dollar to gain again for another, hike from the Fed. Okay, so same goes with the pound dollar. Remember when pound was rising over there, everyone was expecting cyclical, sell-off on the dollar. We didn't see that, and we were expecting it to go down. We are, getting ready for the breakout. In the previous video analysis, we were expecting a short-term buy opportunity from there. All right, from there we have seen some strength, but we didn't see continuation. Okay, and price just simply went for another leg lower. All right, and was expecting some bounce off over there. We have seen some bounce off, but again we didn't see. All right, so we were not looking for that trade. Okay, so same again, next week, if you see that the euro is going to rise during the ECB rate decision very, very aggressively and going above the 112, 103, 103, 102, all right, then you are looking pound to bounce off to and go above and rise above, 21, 22. Okay, and similar kind of triangle. There is possibility that the pound still can keep dragging more lower all the way up to 1 mark. All right. So as I said, Bank of England is expecting that we're going to have 14%, inflation, okay, which can cause pound to stay under pressure. So aggressive hikes from, Bank of England can change, some scenario, but I don't think so that, still pound can survive against the dollar strength, even, after having, aggressive hikes from the Bank of England. So what you are looking, Australian dollar to also continue to keep dragging more lower all the way back to that previous low 56 areas. All right, and we still got a room to run on this chart. We were expecting it to fall, right? So if I'm gonna look at the Australian dollar chart, okay, so Australian dollar is still got a room to run. Australian dollar and Australian dollar CAD still got a room to run. So the move is already happening over there. Yeah, but we still got a room. We still got a room. So this chart can break down this previous low. Okay, so during the rate decision on the Australian dollar, you are simply looking for this to break out and continue to keep dragging more lower all the way back to that previous low or below that. Okay, so what trade you are looking simply during the RBA rate decision breakout and continue to keep dragging more lower. All right, so breakout and breakout this trade. So trade is very much clear. Move is already happened. So in case if it doesn't break, okay, and price push all the way back to that previous high, so still gonna be that trade. Okay, this is not the move you should chase. So this is the trade you are looking for. So if I'm gonna pull out, this chart on it, look at that. So the pound has already broke through that previous low, right? This previous low. Okay, so pound has already broken that previous low and gone below that, so just sliding lower than that. So we may see potential opportunity on this chart. So you're looking at it to drop during the rate decision or specifically after the rate decision. All right, hope that makes sense now, guys. So New Zealand dollar is also going down. We were expecting it to, in the previous update, we were expecting this correction to this move, all right, but we have seen breakout of this previous low. We have seen significant sell-off on the pound, on euro, and then we turn bearish on it. Okay, this next leg lower, which is just speeding over there. So structure is very much similar. The move you are looking all the way back to that previous low up to 54, 55 areas, but there is possibility we can see another leg higher. Okay, but that higher leg still gonna be a continuation move. All right, so what you are looking next week, just break out and continue to keep dragging more lower for short term. Okay, so small moves, not looking for a big trade. Okay, so small trade like this, and if it keeps breaking, keep sliding lower like the pound Australian dollar, you are looking that to continue to keep following that, keep following this. Okay, so that's the trade I'm actually showing. These are the move. Okay, so small moves, break and continue. Right, these moves. So keep taking your trades off. Do not hold that for longer term as the move is already about to complete, and get ready for a bounce off. Okay, and once that bounce off comes, highly likely that bounce off going to come after the Fed rate decision, and after the end of the September, we're going to have that daily correction very much similar like that. But once the Fed rate decision going to pass on. Okay, so dollar CAD, if we're going to look at the weekly chart, so weekly chart is just simply slowly heading back to that previous top. Okay, this move which we were expecting to happen from that previous low, so it's heading towards that weekly wave. So what you are expecting, there is a rate decision on it. So listen, so if you see that the dollar CAD is falling very, very aggressively, okay, so I'm gonna give you a tip. If you see that the next week on a Bank of Canada rate decision, we're gonna have a rate decision on Bank of Canada. If this chart fall very, very aggressively, okay, then dollar gonna fall across the market. We're gonna have daily correction, very much similar like that. All right, then you are start looking for short-term dollar selling. All right, as the way I have just shown you on some charts like euro dollar or New Zealand dollar, okay, but Australian dollar to tag the previous low and then go higher, right? And there obviously there going to be a sell opportunity, but right now, what you are looking, gonna go to the lower time frame. Okay, so you don't have a perfect opportunity on the dollar CAD at the current price. If you're gonna chase that, you're gonna buy at the top, right? So you looking for another breakout. It's very much similar like that, all right? And better to stick to the counter trend move, okay? This move, dollar CAD to go down rather than chasing that. Watch the price action at that top. Even if it slightly goes higher, break the previous top, you're still looking it to go down. Okay, not looking for dollar CAD to continue keep rising. Okay, because we are having almost similar kind of policy from Bank of Canada and Fed, right? Neck on neck. Both are raising almost with similar kind of basis point, similar kind of Bank of Canada is also looking to raise the interest rate with 75 basis point hike. That's the reason we are having rise but slow rise on the dollar against the CAD. Okay, so we may see slightly can go higher, but again you are looking this kind of move. Okay, and once price tag that previous low, you are looking it to go higher. When you look at this move, make sure you understand that you are going against the trend. Okay, the trend is this. Okay, the longer term trend on the dollar CAD is the bullish. Yeah, so the weekly chart which I have just shown you, you're gonna go against that. So be prepared for that kind of move. Okay, that kind of move when you're selling over there. So it's proper risk reward there. So dollar yen. Okay, so need to understand that first of all, why we have seen that move. All right, why we have seen that move and what can happen next. We were expecting it to draw from there, dollar yen to draw from there. Okay, so what happened over there? We have seen crash on the oil, and the other thing is the yield curve control. Okay, we have seen yield curve control from the Bank of Japan, which has caused the yen to lose its value very, very aggressively. Okay, so let me tell you in a different way. So I'm gonna load that chart. We're gonna look at the 10-year yield. Okay, this is the Japan 10-year yield. Okay, and if I'm gonna pull out US, let's say 2. Okay, so we can compare 10 as well. Okay, but this is the reason. Okay, that's the reason we are having yield curve control. The US 2-year yield is pricing in for a lot of rate hikes. A lot of already has happened. Okay, but a couple of more rate hikes. So sitting at 350, while the 10-year yield on the Japanese 10-year bond is sitting at 25%. Okay, and Bank of Japan, is holding this to break above. They are not letting that to break above. Okay, they are buying bond to hold the yield here at that area. Okay, below 25. They are pushing it to the downside. They are buying bond when they see that the yield is pushing above 25%. They are buying more bonds. Right? They are buying more bonds. What that action from the Bank of Japan is doing? That action is creating inflation. Okay, and Bank of Japan got a golden opportunity right now to create the inflation. All right, they're printing more money while the rest of the world is sucking that money away from the system. All right, rest of the world is fighting with inflation. Fed is fighting with inflation while Bank of Japan is creating the inflation. They are printing more money. Fed is sucking that money away. So that's a policy divergence between these two major banks. All right. Also, many countries are facing energy cost, right? Higher energy cost. So Bank of Japan, Japanese government is subsidizing their people, right? They are you know, subsidizing, you know, oil, because oil, you know, gone above 120. Yeah, that was also a blue for the yen. Then, you know, Bank of Japan, you know, created, started yield curve control. That was another, bearish signal for the yen. Okay, but that policy is not going to sustain for longer term. Okay, that the policy the Bank of Japan is holding right now, yield curve control, they have to abandon that. Okay, once they're gonna abandon, we may see break above that 25%, aggressive breakout of that 25% on Japanese 10-year bonds. Okay, that can, you know, catch up the other rest of the world yields. Okay, that's going to be a strong bullish sign for the yen. All right, and that's what market is preparing for. You know, the inflationary assets which are going down, yen has a strong correlation with them. As long as they are falling, yen is going to set up for a big drop. All right, right now what's happening? You know, yields are rising. Yields are rising, bonds falling. All right, and the stock is falling too. No one is buying the safe havens right now. Even, you know, indices are falling. Yeah, safe havens are not being bought. Silver going down, gold going down, equities going down. Everything is just falling. Why? Because central banks are fighting with the inflation. So that's creating divergence. Okay, that's creating divergence between the assets. Right, the assets which are right now falling, like the yen, the only currency which left to gain. That's the only currency which left, and bonds. Okay, yen has to gain and bond has to gain. So bonds and yens, they are, you know, making perfect opportunities for longer term, you know, buying. All right. So we're gonna have strength, and that's gonna be a longer term buying opportunity on yen pairs, because this policy, the yield curve control, is going to be abandoned at some point by the Bank of Japan. So maybe, you know, in this September meeting. Hope that makes sense. Now let's get back to the dollar yen. So what you are expecting, okay, as long as Fed is holding the higher, you know, hawkish, staying hawkish. All right. So there is possibility that we may see these kind of moves. But what is the move you are preparing for? A huge cyclical drop, which is going to come. A huge cyclical drop, and that drop even can, you know, take the dollar against the yen lower than this. Okay, the 100, it can go even lower than that. All right, so market is simply preparing for a worse recession. Right, as long as Fed is fighting. So let's look at the lower time frame. On lower time frame, as long as prices just forming these corrections, shut them up. Okay, so shut them up, and once you see that this stronger sell-off is just coming over there, so you're looking, you know, to chase that. All right, so stronger sell-off, correct, and keep falling. So you're looking that move specifically after the September Fed rate decision. Okay, so after Fed may pause after, you know, September for a while, they can hold at 350, which gonna be a we can say that a buying opportunity on the indices. Okay, we're gonna talk about that too. So that's the move you are preparing for. Okay, so similar kind of move you are looking on the. If I'm gonna pull out one more chart on it, okay, let's just look at this. Where is the divergence? These banks are creating divergence. So these, you know, central bank policies are creating divergence, and that divergence gonna end. This is not going to stay there, guys. And we're gonna have, you know, tremendous move. Once, you know, we're gonna have some. Look at this. Okay, where the euro is going, euro yen is going higher, while the euro is falling. Okay, so dollar is a safe haven currency. Yen is also a safe haven currency. Okay, so divergence is being created by the central banks. Okay, before that, what market was doing? Both currencies were, you know, moving similarly. All right, so similar move was happening over there. But what happened here? Yield curve control came. That came in 2016 as well from the Bank of Japan as well. But we haven't seen that kind of divergence, the divergence which we are having now. Okay, so we're gonna have So you can't expect that dollar to fall, all right? Okay, you can't expect dollar to fall and euro to rise from here. All right, you can't expect that euro to rise and dollar to fall. Why we can't expect that? Because market is looking for, central banks are looking for deflation. Okay, when there is going to be a deflation, all right, so you can expect dollar to stay strong rather than dollar to get weaker, right? So dollar cannot fall from current price. Okay, as I said, dollar only can fall if the gap which we are having between the inflation and Fed fund rates, that shrink very, very aggressively, and Fed hold its policy and start cutting the interest rate, right? And the rest of the central banks keep raising the interest rate. Then you can expect that big change can happen, but that's very less likely. So what's going to happen? The yen gonna start gaining, all right, and the divergence will start getting over. So that's the reason, guys, I'm staying bullish on the yen, all right, because if you miss that move, okay, the move which you are looking on, which we were expecting on the euro to happen from that top, or is a strength on the dollar, you miss that move, okay, then you shouldn't miss that move on the yen pairs, because if you remember that we were expecting euro to pull out. Right, so that's the weekly wave which we are already happened over there. So this is going to be the wave on the yen pairs too. So if you're looking to catch that, you have to go against the trend. All right, you have to go against the trend. You always looking to catch the trade from the top. So what you are looking, you are simply looking this to drop after the ECB rate decision. Okay, don't sell it before the ECB rate decision. So after the ECB rate decision, you are looking this head and shoulder pattern formation to form and continue to keep dropping. So this might be a last correction on the euro yen. Okay, we have seen that, head and shoulder formation on a euro as well. Okay, and this might be a sign that the yen pairs are going for the head and shoulder formation. Hopefully you see that now. Okay, so on daily chart, it's good. Okay, so you see left shoulder, head, and right shoulder, left shoulder, head, and left shoulder. Okay, so this might be a start for this big run on the yen pairs. Okay, so there is a still, risk for the price. The way euro has gone back to that top, it still can push slightly close to that top before going to drop. Okay, so make sure you understand that. But you're watching this head and shoulder pattern formation for the rest of the year, for big waves to catch. Hope that makes sense, lads. So now let's look at the lower time frame. What you are expecting on the lower time frame. Okay, as long as prices just keep correcting these small lower time frame, you are looking price to stay shot them up, and every time a new high is coming over there within that wedge, you're looking that to break down. Okay, so short term counter trend trade and possible breakout of that channel, the flag which is just appearing over there right now. Okay, this. Okay, so there we were expecting this move. That move happened but didn't continue. All right, then we were expecting another leg possibility over there, so that possibility is just playing out. Okay, but the bigger reason which I have just shown you, you are just looking to go after. So this move after the ECB, if price slightly goes higher, okay, the bigger picture is not going to change, guys. You are looking to counter that, this chart for looking to catch. So where I'm expecting, all right, I'm expecting it to tag these levels first. Okay, so these going to be the medium term target, and the longer term target's going to be lower than this. Okay, so lower than this 114, and we're going to see, all right, so we're going to see that the price is going to go lower than this, guys. Okay, it's a matter of time, but we're going to see price is going to go lower than areas over time. Okay, so pound yen very much similar like that. Head and shoulder formation is just appearing over there. We were expecting start for the big wave from here. Okay, we haven't seen aggressive sell-off. All right, price went lower, short-term move happened. Now it's simply setting up for another leg higher. Okay, very much similar like the euro yen chart. Okay, and do not sell it from these areas in case something happen. You're looking simply it to go higher. Hold these areas, go higher. Similar ABC move like euro yen. Okay, head and shoulder, and then start looking for this to continue to keep dragging more. Okay, so there might be a short-term buy opportunity over there. Okay, this similar like the euro yen. All right. So now let's get to the Aussie yen. I don't think so. I need to talk about that. All right, a lot. If I'm just gonna pull out the divergence, we are also having that divergence on this chart too. Okay, look at that. Where this chart is going and where the Aussie is going against the yen. So policy divergence going down, that's going higher. So this gap has to be eliminated. Divergence cannot stay over. The policy divergence cannot stay over there forever between the central banks. Okay, in simple words, what you are looking this trade. Okay, this trade all the way back to that previous low, and longer term much lower, all the way back to the previous weekly lows. So if I'm gonna look at the lower time frame, all right, so last week we were expecting there is possibility that the price still can go higher. Okay, can break that previous top. All right, so you're looking it to drop. You're looking it to drop after the RB rate the C. Hope that makes sense. If you are looking before that, then there is possibility that the Australian dollar can get some strength because of the higher interest rate. But once they're going to raise the interest rate, then you're looking it to just keep dropping lower, right? This wedge. So if I'm going to make it, let's just go and make it more simple, guys. What you are looking, making it more simple for you. Okay, so you see this is the formation you are following on these pairs. And price is just simply, doing similar stuff over there on this chart. Okay, so high, another higher high, okay, another higher high, and then price started to fall on the oil. So you're looking similar kind of stuff over here. Okay, so we may see, a couple of highs over there like that, okay, before going to drop, right? Couple of highs over there. You're following this chart, this pattern, and this is the move you are searching over there, aggressive sell-off. Okay, so let me tell you in a different way, guys, what move you are looking. Okay, why this is happening? It's because of the, okay, so the correlation is very, very strong on these charts. Okay, so there you see. So this is the move you're looking. That is the move. Okay, like oil has already given you. So you see that there is a correlation, very strong correlation. So if oil keeps dropping, okay, oil keeps dropping all the way go to 60, 65. You shouldn't expect these currencies to stay over there. So the commodities currencies to stay higher. All right. So you shouldn't expect commodities currencies to keep rising. The commodities currencies also gonna follow where commodities will go. Okay, so you're looking these currencies to follow the commodities. Hope that makes sense now. Okay, so on lower time frame, 1 hour time frame, and that wedge to break down. Same goes with the Kiwi yen. Okay, so longer term drop, and yeah, so hopefully arrows showing you where we are expecting these to go. Okay, on lower time frame, price slightly can push more higher like oil has done, okay, but this is the move for search. Okay, arrows are showing, guys, are looking. CAD yen, similar. Okay, commodities are leading you where the price is going to go. Okay, if I'm going to pull out another chart to let you know that what's happening, and that is going to be the copper. Okay, so some yen pairs, you can say that, uh, forming similar kind of head and shoulder formation. The head and shoulder formation you have just seen on the euro dollar chart. Okay, so I have shown you that head and shoulder formation. Remember, we were expecting copper to drop from that top. Okay, copper has already, in a bearish trend. Okay, so this head and shoulder formation, or we can say that the wedge formation, we call that wedge reversal formation. So that's happening on yen pairs as well. So the next move is this. Where oil is going, oil is just simply following the copper. Yeah. So what's happening here? Similar kind of head and shoulder formation. We can say that is just appearing over there. Price is struggling to push more higher. Okay, left, center, and right. Okay, and this to continue forming. So on lower time frame, similar kind of like oil. There we were expecting it to drop. We didn't see that. Prices simply went higher. Right, so we were expecting it to drop from there. Price went in that wedge. Okay, now what you're looking for, similar like oil chart, which I have just shown you, correct, go back up, and then quick drop. Okay, all these highs, you are looking to counter the price, counter the market. And longer term reversal, short term, go back to these previous lows. That makes sense. Yeah. Are very much key. Same goes with the Chief yen. Okay, if I'm going to pull out, Chief is slightly a stronger currency. Okay, carry risk. Okay, but move is going to be similar like that. Okay, so oil chart is clearly showing, and Chief yen is just simply doing that. Okay, so yeah, so arrows are showing a bit risky. Okay, but if you can, get into the market on time from the top, then easy, right? Okay, so slightly can push more higher, and this is the short-term trade. Okay, and a quick aggressive sell-off, longer-term. Okay, so Rand is also struggling. Okay, Rand is not at the best spot. Okay, but it can form that head and shoulder formation as well. So if I'm gonna look at the 4-hour time frame, that's gonna be right, rather than looking. Okay, so this triangle. Right, price to stay within that triangle, hold those previous tops, and continue to keep dragging lower. Norwegian krona is also doing similar structure. Okay, that bigger wedge. Okay, so similar wedge is just happening over there, or head and shoulder formation. We can say that. All right, that to break down and continue to keep falling all the way back to that previous low. So if I'm gonna look at the 4-hour time frame, okay, flag is just simply appearing over there. That flag to break down and continue. If not, then go back past that top. Stay within that wedge, okay, and from that wedge to again drop, right, and like as well. Okay, so break down and continue this daily correction. So slightly a tricky pair at the current price, okay, because it's already dropping. So not at the best spot where you can chase it, okay, but we are expecting this 4-hour time frame correction to break down and continue to keep dragging more lower. All right. Okay, so EuroCAD. EuroCAD is going to be a longer term buy opportunity, but just make sure you understand that whenever you are going to buy the euro, Europe is going right now, fighting with the higher energy costs, all right, and natural gas shortages, all right, gas shortages, which is causing the euro to keep dropping more lower. So Russian has stopped their supply, which is causing the euro to keep falling against the CAD specifically, okay? But once that divergence is going to be over, means once, Europe gonna have enough oil and gas supply, then this currency is going to spike up very, very aggressively and gonna rise. So for that, you are looking to counter it every time when you see that the price is forming new lows, okay? Next week, during the ECB rate, the CM, you're looking at to break out and continue or fall, test that previous low, and again, longer term rise. So there's going to be a quick rise on this currency too against the euro. Okay, so very much similar like that kind of rise we can see. All right, or like these kind. It's not going to stay there for longer term. It's going to rise very, very aggressively and soon. Because, countries which are producing, oil and gas, they are having edge right now. And countries which are buying those commodities from those currencies, they are, having not that edge. Because of that, their currencies, they are having, higher inflation and, fighting with the energy costs, and their currencies are dropping. So the pound chief, okay, so pound chief is just simply heading, testing that previous low. All right, so the weekly wave is just simply heading. So let me tell you what you should keep in your mind, where the move is. Okay, so if I'm gonna look at the weekly chart, there is the weekly chart. All right, that weekly chart is just simply dropping. Okay, we are having that wave. So where that wave has to appear is the euro pound. Okay, that wave has to appear over that chart, euro pound chart. All right, so the wave has already happened over there on the pound chief. So if I'm gonna, pull out this chart and invert that, and gonna pull out the euro pound. Okay, so look at this. Which chart is behind? So the euro pound is still, lagging. So this is the move which has to appear over there. All right, hope that makes sense. So if I'm gonna, put it a different way, so at this, look at this. So which wave happened over there on the euro pound chief? Okay, bearish wave. Okay, so if I'm gonna go back, look at this. So which wave? Yeah, there is a correlation which is, which gonna drive that move, right? There is a correlation which drive that move, right? So the move is gone on the pound chief. Okay, so what you are looking, only short-term continuation trades, price to get back within the moving averages and continue to keep falling, right? Short-term continuation. There is no reason at the moment for buying the pound against the chief. Okay, so if it goes from that triangle, one more leg higher, okay, continuation to keep. And the chart is the euro pound. Okay, so for longer term, you look in this chart to explode for upside. Okay, like the way you have seen explosion over there. Yeah, it may take time, but that can happen. All right, so that explosion gonna happen. So this is the triangle. So what you are looking during the ECB rate, the CN, you are looking this, correction which is just building over there to break out and continue to keep rising. If that doesn't, then fall back, test the previous low, and again stay longer term bullish on it. Yeah, I'm gonna look at the lower time frame. Okay, so these corrections, we were expecting these corrections to keep breaking last week. So those corrections are just keep pushing more higher, these corrections. Okay, another correction may appear over there. All right, so another correction may appear over there, back to within the moving averages. Okay, and you can say that simple ABC move. Okay, hold those moving averages and break out and continue to keep rising. So if it doesn't break out, okay, and fall back, short term one more drop, but longer term buying again from the lows. Yeah, Australian dollar and New Zealand, there was, set up on the YouTube channel. I have posted that opportunity, guys. So price is just simply reversing from that top, and you are looking for that move. Okay, this channel to break down, the channel which is just over there at the top. The price has already started to fall. Video analysis were there on the YouTube channel, which was, telling you that watch price action over there and one more drop. So watch it to continue to keep dragging lower. So during the Australian dollar rate, the CN, it to go back up, test, and continue to keep falling. Okay, dollar chief, not a best chart right now, guys. Okay, and won't suggest you to do anything on this chart. Okay, let this to continue to keep crawling upside slowly all the way back to that previous top or new top, or in case sharp breakdown, correct and continue to keep falling. All right, so not a best chart right now. Wouldn't suggest you to do anything on it. Okay, so there is a continuation trade on it. So next week you are looking this to break down. Okay, so this short-term trade, we were expecting it to continue. The trade is already going on its way. All right, you are looking this trade. Okay, so this trade next week, short-term, break the previous low. Price to stay below the moving averages and break the previous low. All right, divergence is coming over there. We may see some price action over there for upside. Okay, keep that thing in mind. All right, so this is the trade you are looking next week, guys. During the RB rate, the CN, we still got a room to run on this chart. That's the trade. Okay, so price if push up and goes back within the triangle. Okay, so that triangle, all right, that triangle, you still looking that triangle to play out for more downside. Okay, this is the trade. That's the trade. Okay, so Euro Chief, simply looking for longer term reversal, go above the 103, 105 for longer term. Okay, on these lower time frames, you are looking price to hold these, 1 hour moving averages. Okay, or go and test the 4 hour moving averages. Okay, 4 hour moving averages are reversing, so we may see small push lower. Okay, this can push lower, and 4 hour moving averages to hold there and breakout for upside. This correction to breakout, do not break below those moving averages for our time frame. So during the ECB rate this year, you look in this to just keep rising aggressively for upside. That's it. Sharp breakup. Okay, CAD Chief is not a best shot right now, guys. You look in that expanding triangle to form and continue to keep breaking down that expanding triangle. Okay, so Euro Aus, you look in Euro Aus to continue to keep rising, specifically during the ECB rate this year. Okay, we may see another leg lower. Yeah, so in the previous video analysis or video, weekly market outlook, we were expecting, the euro to rise against the Australian dollar from these previous lows. So we are breaking out that wedge, but we still can see another leg lower in case if, things get worse between the Russia and Europe. Okay, if thing doesn't get more worse, you're simply looking for ECB to be more hawkish, okay, and euro to hold those moving averages. Simply you're looking euro to hold those 4 hour moving averages and trend to continue to keep rising. Okay, this correction which is just emerging over there within the averages continue rising. So same goes with the euro New Zealand dollar. We were expecting euro New Zealand dollar to rise from after having that breakout. Okay, so we got a breakout and price is just simply rising. Okay, so you're looking the next correction which is simply happening over there. So if I'm gonna pull out my moving averages, you're looking this to 4 hour. Okay, so let's go to the 4 hour time frame. All right, so 4 hour moving averages. So structure is slightly changed now, so I have to remove that. Okay, so price is just simply heading in the 4 hour moving average. So if I'm going to pull out some rectangle there, these are the places looking price to hold these areas, support, you can say that, and bounce off and continue rising for upside. So pound Australian dollar is simply sitting at the previous low, all right, and you're looking for this to go higher. Okay, but as I said, pound is extremely under pressure because of the higher inflation. So when you are buying the pound, make sure you understand that what's happening. Okay, but longer term, simply reversal, right? So pound for longer term reversal, you're looking this to bounce off after the RBA rate, the CN. Okay, not before that, after looking this to bounce off and go back up. Right, and same goes with the pound against the dollar. We're expecting it to hold that previous bottom, and in the previous video analysis we were expecting this to bounce off. It bounced off, okay, but didn't maintain that trend. It's coming back again. You're looking that move. All right, so UK is going into recession, but the rest of the world is still not. That's causing the pound to get more worse. That can happen, that the pound can keep falling, but the rest of the currencies keep rising, all right? So the rest of the currencies gonna also fall and gonna fall hard too and gonna follow the pound, all right? So for what you are looking next week, a strong, aggressive move, correct? Go back up, test that channel and go down, or longer term reversal. Counter trend trade. So I'm showing counter trend trade on pound. When you're going counter trend trade on the pound pairs, make sure you understand that what's happening. All right, so Aussie Chief. Okay, Aussie Chief to break down that flag, okay, and continue to keep falling. Daily flag. Right, so that's the structure showing clearly what you are looking. Yeah. Right, and the Kiwi Chief also similar, very much similar structure like the Aussie Chief, all the way back to that previous low on 4-hour time frame. Tries to go back up, test that top, and continue to keep falling. All right, so dollar peso is setting up for a big run, okay, for a big run. You see my arrow? That there. Dollar peso is setting up for that run. You look in buys every time, and price is coming within that red zone, all right, or support zone. We can say 1950, 1960. So the trade going to be very much similar like the dollar rand or dollar Chinese yuan. So there you go. You remember? And I hope you understand that what has happened here on this chart. You remember that wedge? Okay. We were expecting it to rise within from these lows and reverse. Okay, if you remember, it reversed very, very aggressively. Okay, and just continue to keep more higher. So we still got a room to run. That trade still needs to appear over there on the dollar peso. Okay, what you are expecting on dollar Chinese yuan? Yeah, policy divergence is just happening over there between the Fed and the People Bank of China. People Bank of China is printing more money, while Bank of Fed is just sucking more money away from the market, which is causing the dollar to gain. You look in these corrections to break out and continue to keep pushing more higher. That's it. Simply, get back within the moving averages, hold those moving averages, and continue to keep rising. All right, so now let's look at the indices, and then we're gonna talk about crypto and other metals. Okay, so expecting Japanese, a Nikkei to continue to keep falling. Right, so if I'm gonna look at this correction to break down. Okay, why we are expecting indices to fall? Why are we expecting indices to fall? Because central banks want indices to fall. They want deflation. They want inflation to come down. Right now they want what they want. They want unemployment to rise. Okay? They want unemployment to rise. Okay, unemployment only going to rise if companies stop hiring and start laying off employees. Then inflation, and unemployment can go higher. So when unemployment will go higher, then you're gonna see deflation. Inflation gonna come down. So you shouldn't expect indices to keep going higher or companies to keep doing well, keep hiring people. All right. So that's the reason. There is a huge fundamental reason behind the indices to continue to keep dragging more lower, test the previous low or form new low, and then there are going to be a buying opportunities again on the indices. Okay. So central banks, they want indices to drop, and you shouldn't look for buy them. When they will show some, signs that they are, holding on higher interest rates, then they're going to be timing to go for long. All right. So you're simply looking for, these corrections to stay below those moving averages. You see those moving averages coming out over there. If it gets, it's breaking right now. Okay. If it gets over there, just stay trending to the downside. Okay, so same, let me look at the bigger picture and then time frame, because these going to be the important. Right, so these going to be the important. So what you are looking indices to break down this previous low. Okay, break down, form new low. All right, and give us another correction very much similar like this previous one, or break out and continue to go higher, or fall down for another leg lower and stay within that bigger correction, okay, weekly correction for breaking out for more upside. Okay, this is what price is building over there right now. Okay, and keep that thing in mind, that what's happening over there and what you are looking and where your buy opportunity is going to be. Okay, so breakout, continue as that low, double bottom and then buy, or breakout and form new low and then go higher. Yeah, hope you got the idea. So same goes with the other US indices. Okay, I don't think so I need to talk about, so either form double bottom or new low. Okay, again same structure, bigger flag, weekly flag. Okay, what to do on lower time frame? Corrections are just simply appearing over there. Those corrections to stay below, 4-hour moving averages or 1 hour. First of all, 1 hour. Okay, 1 hour holding. Yeah, if correction gets bigger than 4 hour, then keep breaking down. Yes, same goes with the S&P 500. New low or test double bottom. You see, structure is similar. If I'm gonna go to the lower time frame, 1 hour time frame, okay, breakdown and continue to keep falling. Okay, this is the trade you are having for the next couple of weeks till Fed raise interest rate, till we're having Fed meeting. Yeah, hope you got the point. So same goes with the small caps. Small caps to also continue to keep falling, break the previous low or form new low, and then go higher. Or the way I have shown you the US 30. Yeah, we'll talk about that later on. But first of all, you're looking this to continue to keep dropping. Okay, so this flag to break out and continue to keep falling. Yeah, 4 hour, 1 hour, 4 hour. So European indices are already testing that previous low. Okay, so if I'm gonna look at that, we are already testing that previous low. You see, we were expecting that to fall too, right? So they are already testing that previous, almost testing. So you look in breakdown, new low, and then buying opportunity for there for corrections. Okay, so first of all, continue to keep dragging more lower. Yeah, so that's what it is showing. Chart is showing already. Same goes with the euro, EU stock 50. Okay, break the previous bottom and then give a buy opportunity. How far that buy opportunity goes, we'll see. But right now, bearish continuation. Still fat rate, the scene is there. Okay, and the Europe stock is also falling. Right, so this correction which is just appearing over there, stay within the moving averages, hold those moving averages the way moving averages held already. Okay, and keep breaking. Slightly go higher, it's already breaking down. You're looking that to continue. All right, so Frank 40, similar. Right, so similar. Lower time frame is also similar, like the US indices. So break down and continue to keep dragging more lower. Break the previous bottom, continue to keep dragging more lower, or give us a double bottom. Okay, 1 hour, similar. Okay, Uzi 200, break down and continue. Okay, break down and continue to keep dragging more lower. Okay, 4-hour time frame, similar structure. This 4-hour time frame to break down as this previous low. So we still got a room to run on this. So I'm going to ignore this. UK 100 index is not looking good, all right, at the moment. So what I'm going to look, a couple of individual stocks as well, guys. So I'm expecting Apple to keep dropping, all right. So test that previous low or slightly break that previous low. Very much similar structure like the US indices, okay. So it's breaking, it's pushing more lower. So we're expecting it to continue to keep dragging more lower. Okay, so same goes with the Microsoft. Microsoft is already going down. Yeah, you don't have a lot of potential left over there, but if you understand that, you still can sell it on lower time frame during the New York session on 1 hour time frame, 1 minute time frame. We still got a room to run on it. Okay, so continue to keep dragging more lower. Microsoft and Amazon, similar. Okay, so correction is just happening. A similar trade. Amazon is also similar like the indices. Next leg is just happening. Amazon to break down, and these big big tech needs to fall for indices to continue to keep dragging more lower, right? So Meta is already struggling, so I'm not going to look at the Meta. So Nvidia is also going lower. Google is also going lower. All right, so AMD also got a room to run. Yeah, so in the previous analysis, we were expecting it to continue. So we still got a room, okay? We still got a room to run back to this previous bottom. Similar structure like the indices. Yeah, so it's also dragging more lower. So oil to continue to keep dragging more lower, okay? So there, if fundamentals change, which I don't think so gonna help oil to continue to keep rising, okay, then we may see that move. If we see complete shut off from the OPEC countries or supply, then that can have caused the oil to go higher. Otherwise, you are looking this to form a flat formation and continue to drag in more lower. Okay, so this flat formation can break down that and continue to drag in more. All right, so the flat formation you're going to see on here. Okay, if I'm going to make it more simple, what you are looking oil to stay below these daily moving averages. Okay, the price is just trying to, you know, trying to stay below those daily moving averages, and you're looking price to stay below those moving averages. And for our time frame, this flat formation, right? And copper to just continue break that previous low, right? Copper to continue to keep falling, that correction to continue. All right, so crypto to also test that previous low. BNB has that previous low. Okay, breakdown, continue to keep falling, and then give us a double bottom, very much similar like the Nasdaq 100 index. Okay, same goes with the Ethereum, double bottom, continue to keep falling, test that previous low, and then give us a buy opportunity. All right, and Bitcoin breakdown, test that previous low, and then give us a buy opportunity. Chart is very much showing what you are looking, double bottom. Okay, or slightly go lower than that, buying opportunity. Once they, first of all, right now you're looking them to continue to keep falling. Okay, all these coins. Okay, NEM, test that. I'm gonna look at the 8-hour time frame, like structure. Right, so yes, this is what you're looking. Wedge, test, form new low or test that previous low. Okay, very much similar structure gonna be over there on all these coins. Okay, bottom, buying opportunity. Okay, so ADA, similar. ADA is just gone. You shouldn't chase that ADA. Okay, let the ADA continue to keep dragging more lower, test the bottom, and then, all right, and same goes with the Lumen, XLM, all right, XLM, similar structure, all right, so EOS to fall, test the previous bottom, do not chase that, all right, same goes with the Phantom, triple bottom, okay, Sia coin, triple bottom, KuCoin, triple bottom or new low. All right, so CTX, triple bottom. All these coins are setting up for buying opportunity. Okay, so you keep dropping, test the previous low, and then, so we were expecting this to drop from, this previous low to drop, test, and then go higher. It didn't test and just exploded for upside. These kind of moves you are looking from the lows. Okay, so just test the previous lows, triple bottom or double bottom. Double bottom is not there. Okay, so triple bottom and then go higher. Okay, so this is also test the previous low, and then longer term buying opportunity is going to be over there. Solana also tag the previous low or new low, right? And short to medium term buying opportunity. Okay, so Dogecoin also test the previous low. Okay, Atom is rising within that channel, test the previous low, then going to be a buy opportunity. Okay, so there are many coins which are, struggling and testing the previous low. So you're looking them to test the previous low and then go higher. Okay, so same, Veracity. And some of you guys are asking for the gold. I'm going to look at the gold and then gold, all right? So I posted a chart earlier. Gold with the, real yield. Okay, so there is a chance that the gold still can keep dropping lower, can break down and continue to keep dropping lower all the way back to 1400. All right, but what you're looking short-term buying opportunities over there. Okay, from these previous lows, short-term buying opportunity. Okay, from this previous low, past that previous low, and short-term go back up. That's it. So silver also going down. Yeah, so silver can keep dropping. All right, so longer term, I'm still expecting silver to keep falling all the way back to that previous low, and longer term buying opportunity from those previous. While you're looking, just simply another correction very much similar like this previous one, right? I mean, counter trend trade, counter buying, short-term counter buying. That's it, guys. Enough for this week. All right. I do have a lot of assets over there, but it's gonna take a lot of time. I'll try my best to update during the weekend if I see setups are coming over there. All right. So again, the most important thing is the chart which I have shown you earlier at the start of the meeting, right? Weekly market outlook. Yeah. So inflation, yield, and Fed fund rates. That's going to be the most important chart, which is going to matter, which is going to decide where the market going to go ahead for the rest of the 20. Okay, so thank you very much. We'll see you back again in another weekly market outlook next week. Until then, bye, and have a good, nice weekend.